Hello, I'm Ryan Lightfoot-Amanoff, and welcome to Kepler Trust Intelligence Ideas of Your ISA event. Today, we're joined by Ian McCombie of Baillie Gifford to discuss the Baillie Gifford UK Growth Trust. Ian, thank you for joining us.
Hi, Ryan.
BG UK owns a high conviction concentrated portfolio of growth focused UK equities. Ian and his co-manager invest with a long-term focus, looking at stock specific factors on the belief that share prices will ultimately follow fundamentals over time. To talk us through the opportunities in the sector, Ian will present for approximately half an hour before handing back for around 15 minutes of Q&A. You are welcome to ask questions as we go along in the box in the corner. I will collate these questions and put them to Ian at the end. So without any further ado, Ian, please take it away.
Okay. Well, thanks, Ryan, and good afternoon, everyone. Now, the trust is called UK Growth Trust, and in a sense, it's quite a topical point, UK growth, because everyone is talking about UK growth, or perhaps the lack of it, and you can see our Chancellor there is obviously very keen on UK growth, and there's a lot of scepticism about it. But actually, we think that's perhaps the wrong way to be thinking about it. And actually, this is the time to be starting to think about UK growth when everybody is very pessimistic about it. Now, the first thing I would say that is really quite important is that there's a compelling value opportunity, that the UK is looking as cheap as it's been in about 20 years. And you can see this on the slide here on the page, where you're looking at the UK valuations against global equity valuations. And you can see that the UK is continuing to slightly underperform global equity. You can see that from 2016 onwards. Now, I don't know when that's going to change. And anyone who claims that they do, I think I wouldn't believe them. But what you can see there is that clearly this trend is very pronounced, but it's not sustainable. And the reason I know that is that, for example, some of the stocks in our portfolio have actually in the past few years have been taken out, because ultimately corporations, foreign companies will come in and say, look, that company is good, the valuation is too low, and they'll take it out. Or private equity will come in and take it out. And we've seen a number of our very good businesses have been acquired at a premium, for that. But I think the point for everyone thinking about the UK is looking very attractive. And in particular, when people are very worried about what's going on elsewhere in the world, actually there are some real interesting charms that are in the home market. Now, Baillie Gifford and the UK Growth Trust, we take a distinctive approach to investing. As Ryan said, we're active management. We run a best ideas portfolio, currently 37 stocks. So it's very concentrated. It's very different from the benchmark. I'll show you that later. And it's very much about backing our judgment. We start from a blank piece of paper and we're trying to find stocks that we think are very attractive on the long term. Now, the way we try to run the money is what you call a patient approach, that we are genuinely trying to think long term and not by what's going to happen in the next 3 months or 6 months or even the next year, but potentially 5 years or even 10 years. And the reason for that is that if you own a company that can really grow over a period of time, like a decade, the power of compounding really starts to come through. And that's really, really important, we think, for long-term investors, because you're not trying to guess the market in the short term, because to me anyway, that's a bit of a mug's game. But what you're trying to do is identify companies which you think have got the traits to be long-term winners. And the reason for that is because we're growth investors. And we believe that if you can own a portfolio of superior growth businesses, that will lead to outperformance. Because we strongly believe that the share prices in the long run follow fundamentals. And there's a lot of kind of data over the years, both in the UK, globally, that support that the fastest growing businesses over time generally outperform. But obviously it's easy to say that, but actually how to do that is the issue. So that's how we try to approach investing. But how do we think about the UK market? And I think I've been doing this for over 30 years now. And one of the things I think it pays to be picky. And what is interesting at the moment, and this is looking at our portfolio, the growth trust's forward-looking earnings growth against the market. But you can see that the market growth rate is actually not too bad at 6%. That's a bit below long-term consensus, but it's not too bad. And I think it kind of highlights a really important point that the UK market is not the UK economy. That actually a lot of UK companies have got international growth opportunities. So you can actually play into, for example, you think the US economy is going to do better over the long run. Well, actually, a lot of the businesses in the UK have got very strong businesses in the US, or they're exporting to the US, and you can actually play that growth without having to pay the huge valuation premium that you are paying in the US. But what is exciting for us at the moment is that the UK Growth Trust, the portfolio, its growth rate is even better than the markets. It's almost 12%. Now, I'm sure some of you who are listening to this will say, look, all these numbers are all a bit made up. And I would obviously say they are estimates. There's not a guarantee of that. But it does give us a broad comfort that actually we are owning a portfolio that does have superior growth to the market. And we think that in a market where growth is not easy to come by, that will be ultimately rewarded. Hasn't been for the last 2 or 3 years, and we've talked about that. But I think for people who are looking at the opportunity now, I think it's actually very compelling because growth is on sale at the moment. And one of the other things I think that's really very interesting about the UK over the last 30 years in my career is, once it's quite a sad thing that a lot of commentary now just seems to think that the UK and UK corporates are only based in London and the southeast. And there's certainly been that trend. Now, it's not a bad thing, for example, because the London and southeast is probably the most dynamic part of the economy, and you are seeing new exciting companies emerging there. Wise is one of our holdings, the online payments company that's based in London. We think it's got a fantastic opportunity to grow. If you ever want to use FX and pay for FX, it's very competitive, much better than your bank. And actually, what's interesting is that actually some of the banks are now starting to use Wise for some of their payments because they have got better technology. It's fast, it's efficient, they have scale, and everyone is a winner from it. And they take a very modest cut from that. They reinvest a lot of that back into the proposition to keep attracting new customers. And that's actually a really interesting long-term growth business. So that's kind of based in the UK, in London. But I think what's really important, I think, is to don't forget that there are lots of really exciting business outside London. And I don't think they always get the attention that they do because, frankly, most of the media and most of the city are based in London, and they kind of, often feel, no offense to Kepler or anyone, that the centre of the universe is London. But actually, if you go to Nottingham, you've got Games Workshop, or Manchester, Auto Trader. Down to Southwest, you've got a number of engineering businesses. Renishaw is one, or even go to Belfast and Kainos. And these are all really interesting businesses. Auto Trader, I think is, I'm sure everyone has heard of Auto Trader. A lot of people surprisingly still think of it as where's the kind of weekly magazine, but actually that's long gone. It's purely online business. But what really attracts us are a couple of things. First of all, it is the dominant second-hand car portal in the UK. If you want to buy a car, it is the place to go. It is 10 times larger than the number 2 player. Just think about it, 10 times larger. So when you hear about people trying to get into this market, that is a formidable barrier to entry. But then it's not just that what they're trying to do, it's the opportunities that they can grow. Now, the way it works, the way the financial model works is that, myself or Ryan, if we're looking at, try to buy a second-hand car, we don't pay for it. We kind of get the website. But why it's attractive and who pays for it is the second-hand car dealers, because for them, it's actually very exciting. So if Ryan is trying to find a car, based in, where he's based down in, down south, but actually the car that he wants, the car of his dreams, is actually based in Perth, for example, in Scotland. It'd be very hard for him to connect that because he's not going to be looking at the local trade press in Perth, for example. But an Auto Trader, he can type in the kind of car he wants, the kind of make, the colour, the whatever, and it will come up. And then, that connects Ryan, because Ryan will find the car that he wants, and the person, a car dealer is absolutely delighted too, because a punter from down south wants to buy that car, and that moves their stock much more quickly, and that's really important for a second-hand car dealer. You don't want the car on your forecourt for too long. You want to sell it. So actually, Auto Trader is helping. So that's the kind of the core business. But what's exciting about Auto Trader is it's growing, expanding that market. Because, for example, what they've realized is that finance is one of the issues. A lot of reasons why people don't buy a second-hand car is because they can't get the finance. But what Auto Trader are now doing is almost pre-approving people if you sign up for the details, so that you can go out and look for that car with the certainty or near certainty that you're going to get approval. And that's good for you, and it's good for the car dealer, because that can be one of the frustrations of trying to get the dealing, getting organized and it falling through. Now, Auto Trader are really taking a very small slither of that value, but actually you're starting from zero. And that's the kind of management team as a growth investor you get excited about, because they're trying to grow a new market for that business that nobody really thought of before. And that's really, really exciting for us. Now, Kainos, I think, is another business that I think is interesting in a long-term view. It's an IT service provider, and also kind of works for a company called Workday in the US, which is kind of a human resources HR software platform. But a lot of its business is actually selling to local government and to central government. So, for example, the DVLC, for cars, if you're wanting to type in, if your car, a car has what's its MOT history and so on, it's their technology that is powering that system to work. But what is interesting when we were speaking to Kainos recently is also how they're using things like AI to enhance that proposition. So, for example, any of you listening are mechanics, you'll know that when you put the car in for your MOT, there's actually quite a lot of tests to do, and there's a lot of huge amounts of paperwork behind it in terms of testing. Now, if there's a query that comes up, if my car or Ryan's car is going in for an MOT, mechanic in the old days would have to kind of consult the manual and try and find the relevant page. Now, what Kainos are using AI to do now is, for example, is that the mechanic can type in on their system, the kind of keywords or the key issue, and this will then search through that whole manual, and it will find the relevant section for them, and they can consult it and much more quickly. And you can see why that's good for everyone, because for a mechanic, that's probably one of the more tedious things, trying to find the right page for that particular car, and for that particular area of the test. It can be done much more quickly. And in time, that means that the mechanic can probably do more tests during the day. So actually, for Ryan and myself, we probably get more choice, or we want to log in and try to kind of get an MOT. So that's kind of a great example of a company that works closely with their customer, but is using kind of things like the trendy things like AI to actually, in a practical way, work for a company. And what Baillie Gifford tried to do, we spent a lot of time trying to go out to meet companies. And it was interesting that we went out to Belfast a few years ago, and that was the first time we kind of went out to see them. And frankly, we kind of almost apologised by saying, look, you've been around for a while, you've been really exciting, but we actually have never actually visited you. And they said, well, actually, you're actually the first person that's ever actually come over to Belfast to actually see us on site and meet all our people. We normally have to come over to London or to Edinburgh to meet investors. And I think that's a kind of like an interesting thing that, it's very much about, people coming to you, but actually we think the opposite. You get a lot more out of a meeting by go and spend half a day with a company like in Belfast, because frankly, they roll out the red carpet for you, and you meet a lot of people there, and you get a much better feel for a business, which I think is really important. Now, the one company that I haven't really talked about here, which I want to talk to you on the next slide, is a company called Games Workshop. Now, Games Workshop is a really, really interesting business. We've owned it for a number of years, and it makes fantasy figures, and it has games that do it, and I'm not sure if anybody here on the attendees has ever played it, or maybe you've got kids or or somebody like that actually does play it. But what is interesting here is that this is now a FTSE 100 business, and I think people are still amazed that this is a kind of how can a business like this do it? But actually, think about it. This is a franchise that has been nurtured over decades. That this company's got fantastic IP, not just the kind of the figurines that you can see there that people paint, but also the kind of the stories and the history of it that the fans really kind of buy into. Now, what is interesting about Games Workshop, and we've had researchers look into it, there's lots of different ways to play this hobby. Some people, like that person here, all they do is they spend their time painting the figures. And that is very soothing for them, and they enjoy that. And these figurines, if you've never bought them, are surprisingly expensive. But actually, what held us back for a long time from buying this was, what? Surely video games are going to really hurt this hobby, or limit the size of this market. And actually, that's not been the case at all. This business is growing both in the UK and very importantly internationally. And lots of people find it a very kind of soothing, kind of peaceful pastime. And that's one way of doing it. Another thing is you can play the games. You can play with other people. Where you've got with your army, and there are various rules and very complicated rules. And some people really enjoy that, and there's a social element to it too. So I think it's very exciting. They're also using the internet more to get the community there, and there's a huge community of people like Warhammer, which is a game you may see in the shops in the UK. So therefore, there's a lot of really interesting factors here. But on top of that, you need a management team that both are really strong custodians of the business, which I think the current management team certainly are, but also the very attractive economics of the business. That, as I said earlier, it's a very high margin business, because these figurines and so on are kind of sold for quite a lot. And when there's a new game or a new kind of a line of for example, Space Commandos or Space Marines, sorry, they sell out very quickly, and that's very attractive, and that's what you're always trying to do, kind of create something new for the fans to kind of get excited about. But the other interesting thing that I think is most current, which is something to keep an eye on, is that they have signed, after a long negotiation with Amazon, for a TV series to be based on one or two of their characters, and that's just a fraction of their IP. But again, management didn't just jump in and say, oh, Amazon or Jeff Bezos are kind of offering a bundle of money, let's just take it and don't care about it. They spent a lot of time negotiating, making sure that that their IP is going to be respected, that the fans are not going to be appalled when they see it, and it rings true to what the world of Warhammer. So I think that's now started, or certainly the agreement's been signed. So I'm sure that we'll see in the next couple of years a TV series. Whether it will be a hit or not, we'll have to see. But we suspect and we hope that there will be, certainly great publicity for the franchise, and it was bring home to the fact that actually it's a fascinating place. That is actually our biggest holding in the portfolio, and it's one that we're really excited about, and actually a very positive update very recently. Now, you're hearing all that, and you're saying, well, you talked about all these kind of interesting kind of companies, but aren't all UK portfolios dominated by the usual suspects? The big banks, the big pharma companies, the companies that you hear about, and they've got the kind of the growth challenges. Are they going to grow? How are they going to make that transition? But actually, with UK growth, you don't. And you can see there on the top 10 holdings there, we don't own the usual suspects. This is a highly distinctive portfolio of companies. And the common theme is that they're all growth winners. And you can see that, and I can talk through more of the companies in the portfolio. But I think one thing I think is really important here is when I'm talking about growth winners, I'm talking about long-term growth winners. And the reason I'm saying that is because I'm sure there's smart people who are listening to the call here saying, well, okay, that sounds all very good, but I've heard of Howden Joinery, and aren't they struggling at the moment? Well, for those of you who don't know Howden Joinery, this is the company that sells kitchens through the trade. So retail can't buy the product; only has to go through a business, a handyman that that builds the kitchens, and it's the number one player of kitchens in the UK. Now, there's no doubt about the fact, and the company have been very upfront about the fact that the kitchen market in the current last couple of years has been struggling, and in the last year, I think they estimated that the kitchen market had declined about 9%, which is not great in one sense. Howden was basically flat. So actually, they've been taking market share in this very tough market. Now, why have they been taking market share? Well, we think they have one of the widest ranges. They've got one of the biggest depot brands, which is very important. But I think it's also very small but very important subtle things. For example, they continue to invest in the business. They're continuing to invest in their manufacturing production, taking more of it in-house, it's lower cost. And they're always looking for ways to make themselves more efficient. And what I think is really important for anyone listening here is that these are factors that in the short run are actually hurting them in terms of profits, because they could just say, no, we're not going to do that at the moment. And the profits would be a bit better than they would be at the moment. In fact, the profits have been down a little bit, but they'd be down a lot less if they weren't investing like that. But what we strongly believe is that when you've got a winning business, you have to beat your competition all the time. And the best time to beat up your competition is when it's a tough market, because that's when the really good businesses show their paces. And that often means investing for the long term. And we have been, that management team get it, and we've been certainly encouraging them to continue doing that, to invest, because those short-term pains of actually, building a new factory or building a new distribution center will actually pay off for you in 3 or 5 years' time. And that's so important, I think, because at some point in the UK we will see economic growth again. I am confident about that. I've been around long enough. I've seen these kind of doom and gloom stories. They come and go, and then when things go better again, we'll worry about the next thing. But actually, I think we will see some growth in the UK, and something like Howdens is fantastically positioned for that. But that's just one example. But there are plenty of other companies like Just Group, which is a great play on the annuity market at the moment, where there's a very strong growth story. Or AJ Bell, which is it's a platform that's really, the investment platform. I'm sure people know about it. That's taking market share. It's got a kind of very compelling price proposition, and it's been the one that's been a big winner again in a tough market, but it's growing really nicely. So we think, overall, you've got the opportunity with UK growth to find a portfolio with exciting companies with those real kind of long-term growth winner characteristics. So really, to conclude here, BG UK Growth is very much a bespoke, high conviction portfolio of the UK's best companies. It looks very different to the index, which sometimes will work against you, but we think is very attractive on the long term. We think the growth opportunities for the trust are compelling. I think it's very exciting at the moment. And just to remember for everyone that all the noise at the moment, and I'm sure there'll be a few questions about that, kind of what's going on in the markets at the moment. But we think really important, share prices ultimately follow fundamentals. And what you have here is a portfolio of really attractive companies with above average growth prospects, and that myself and Elena, my co-manager, were very excited about. So over to you, Ryan.
Thank you very much, Ian, for that. Yeah, we have had a couple of questions come in. As you expected, a few of them do look at more sort of wider market issues. So we might touch on those to start, if that's okay. You discussed a couple of stocks which are sort of international leaders in their space. How do you sort of consider the differences of companies with more overseas or international earnings? And in light of the current tariff regime, how does that affect your outlook for these companies?
Yeah, I mean, I think it's a really interesting question, and it's always been a case of, for the UK being a very international market, that these are not new things to worry about, currency and so on. What I think often people misunderstand is that a lot of companies have businesses that are based overseas. So in a sense of they're much less impacted by tariffs than you might think. There are some businesses like I think Renishaw that does export a lot. That might be an issue. It could come up. But I think what I would say, Ryan, is that what people are not always factoring in is management and how management react to that. And actually, it's interesting. I was speaking to a company only yesterday, and we were just talking about this issue, and they were just saying, look, we don't know yet, but that's my job as a CEO, is to say, well, when it happens, is we manage it. But what we're not going to do is make a big bet at the moment, and it might prove to be the wrong position. But don't forget, we've had things like Brexit so far. I know people don't like talking about it, but it has been a big challenge for some businesses, and they've overcome them. And that's what businesses do, that they have to kind of come up with opportunities to kind of do that. So, for example, the Chancellor's new national insurance cost, that is a cost, but they're looking for efficiencies, and I've been looking to speak to a couple of companies. There is a hit to them, but they're also finding efficiencies and savings to kind of try and offset that. So it's not all doom and gloom. That's what I think people forget, is that management teams have that opportunity to do that. So we like growth wherever it is, whether it's domestic like housings or more international business, which is could be a mixture of something like Games Workshop, which has a big international growth opportunity.
Great, thank you. And there's been a slight follow-up question to that as well. Is roughly what percentage of your portfolio is earning overseas versus domestically?
Yeah, it's a good question. Roughly speaking, it's probably 60% overseas.
Okay, thank you. And given you spoke about Rachel Reeves, let's touch on the question on her. Have there been any changes that she has either made or suggested that you think could be the catalyst for a UK recovery?
I'm going to say that without getting into hot water here. Look, I think the initial response of the government, the new government, was disappointing. I think there's a lot of kind of almost goodwill to them, that I think people were expecting them to say, look, we've got some challenges, but actually there's an opportunity too. And I think that we in the market were pretty disappointed by the initial, it was all doom and gloom, and trying to say there's a black hole and things like that, when in fact everybody knew about it beforehand. So and then I think the budget itself and the fact the reaction to it was pretty negative. I think it's kind of forced them to kind of say, actually, we all agree about the issue. We need better growth. We need better productivity, but we actually have to do something about it. And I think some of the mood noises since then have been a bit more positive in terms of things like planning and kind of talking about regulation and potentially changing that. But to be honest, Ryan, the key question is the proofs in the pudding, and we haven't seen that yet. There's a lot of talk, but not a huge amount of action, and that's going to be the big challenge. But I think they are smart enough to know that you can't carry on as we are. We've got a planning system that is so slow, and you've heard also of the HS2, the Bat Tunnel, and things like that. That it kind of, we've kind of slightly swung far too far one way. We need to go back a bit. But there are going to be trade-offs, and some people won't like that. But I think we have to ultimately say, look, we can't carry on like this. That to me is a good situation, because I don't think the market is actually pricing in any improvement. And I think that's the kind of exciting thing for me, Ryan, is that is the opportunity for investor right now. Is the growth is not being discounted, and that's, when we see that, as I think we might, that would be very, very attractive headwind tailwind, I should say, for UK Growth Trust.
Thank you. The rest of the remaining questions are so far quite stock specific focus, which I'm sure you prefer. So one of them is, do you have any allocation to defence stocks? It is actually one of the areas where the UK is a world leader. And if you don't, is there anything that you foresee in sort of the growth expectations would encourage you to buy any?
Yeah, I mean, it's one we don't own any at the moment, but we have some that have indirect exposure, things like Bodycoat and things like that. We are considering one company that we haven't bought yet that might fit the bill. The issue is that they've moved quite strongly already. So, and then the issue is, well, yeah, I can see perhaps that there's an opportunity, but then again, it's almost what I was saying earlier. The proof's in the pudding. People are talking about spending more money, but actually, what are they actually going to do? How are they actually going to spend it? Because actually, one of the kind of key issues when we've been analysing these companies, British Aerospace or Babcock, is they're pretty full in terms of you can't just you and I might say, well, can they build another ship? But that's the shipyards are full at the moment. You're not going to get that shipping for another 5+ years. And that's the sort of thing that I think people have to remember about these things. These are long cycle things. You can't just suddenly whistle up a factory and build a new ship or build lots of new tanks. It's going to take time. So I think there still could be an opportunity for defence. But clearly it's flavour of the month, and I'm always a little bit nervous about following the flavour of the month right now. But I think it's an interesting opportunity, and as you said, we're not big fans of top down, but I think you can't help but think, are the tectonic plates shifting a little bit? Because some of the rhetoric about, can we really rely on America? I mean, I don't know about you, Ryan, but I've been doing this for 30 years. I've never heard people say that before, and that is kind of quite interesting, very interesting, in fact, worrying, you might even say. But what does that mean? I don't think anybody knows yet, but it's certainly, you've got to keep an open mind about that.
Yeah, of course, very interesting times indeed. And sticking with some of the stock-specific factors, Games Workshop, an example you touched upon in the presentation, it's quite a widely held stock amongst sort of UK investors, especially in sort of trusts and funds and things. Does this concern you at all? The stock has done very well, got into the FTSE 100, I believe now. But do you think it is sort of quite widely held at this point?
I think it's more widely held than it was. But as an owner, that's not a bad thing, because if more people want to buy the stock, demand outstrips supply and the share price goes up, and the fundamentals are looking good. But look, one of the things that's really important as an owner of the business, you're continually evaluating. Do you still think it makes sense at this price to hold the position that you do? And one of the good things about growth investing is when a stock works well, it should be kind of gravitating up to the kind of the top 10 in your portfolio. But then you have to keep saying, well, does it make sense from here? And actually, we have occasionally trimmed Games Workshop in the past on that basis. So we're not just sitting there saying, just always run your winners. You're always kind of saying to yourself, okay, that's great, but what about now? Why is it going to be a great performer for the next 5 years? And if it doesn't make as much sense, it doesn't mean you've kind of gone off it, but maybe you need to kind of think about your positioning. And that competition for capital is what we've been doing. And I think that's very much the way we try and run things more generally, Ryan, is that if there's something new or something that we feel has been penalised by the market and there's an opportunity there, then we're very happy to kind of move money around, but not a huge amount. We kind of generally like to hold businesses for as long as we can. But at the edge, that's one of the great things with the board. They're always, challenging us in a positive way to think about that competition for capital. And, that's something we've certainly been, one of the lessons we've learned in the last 2 or 3 years is make sure we're thinking about that and demonstrating that to the independent board.
Yeah, of course. Thank you. And hopefully that answers the question that was in there about falling in love with your stocks. So I think we've answered that one as well. Just a quick reminder, if people do want to keep asking questions, do carry on using the Q&A function in the box below. Perhaps just following on from what you said there, where are you seeing the best opportunities at the moment? Where have been the newest holdings in the portfolio that obviously you're allowed to declare at this point?
Yeah, well, one that we actually took part in an IPO, which is kind of unusual for us, which was Applied Nutrition, which is a really entrepreneurial young business that's profitable, which we like, which is kind of distributing, nutrition and gel products for, sports people in particular. And what we liked about that business was that it's grown very quickly, but it's got a very sensible management team, and it's got a really experienced board. Actually, the chair of the business, guy called Andy Bell, who founded AG Bell. And if you know Andy, he's a very smart guy, and the fact that he's a shareholder and a chair actually says a lot. But actually, what we did when we met the management, we really liked their entrepreneurialness and their nimbleness, and that's a really important point in a business that you might say, well, this is a very growth market, but if you ever look at a supermarket or one of these specialist shops, there's lots of flavors and new flavors and so on, and you need a nimble management team to kind of be able to kind of adapt to that market, and that's what they've been doing. And because they're seen as very nimble and user friendly, they're picking up both supermarket accounts and specialist accounts, and that's really exciting. Not just in the UK, which is even more exciting, but overseas. And that to me is a really interesting nascent growth business. So that did I start by saying I want to buy a nutrition business in the UK? No, of course not. But when an opportunity comes up and we evaluate it, we say, actually, we think this has got a really exciting growth trajectory. That's what you do. So it's very much trying to find those interesting kind of individual idiosyncratic kind of opportunities and own a portfolio of them, but currently about 37 names. So it's a concentrated portfolio, but hopefully if we get them right, they're going to have a big impact.
Yeah, thank you. I've seen that Applied Nutrition, obviously coming in as an IPO, is considered as a small cap. What's your approach to holding companies lower down the market cap spectrum? And do you have like a lower limit for where you start to fish?
Yeah, we don't have officially lower limits, but I think you have to be sensible about it. And we run a very liquid portfolio, but again, you have a portfolio of stocks. We generally speaking, we like what you'll see in our portfolio is we're very underweight the FTSE 100, and we're overweight mid cap and small cap, FTSE 250 and the small cap index. Now, just to be clear, it's not an asset allocation decision per se. It's just very much about we follow the growth. And the reality is, like a business like Applied Nutrition, we think, we hope it can grow at a very fast rate of growth for a number of years. And when you're a relatively young, small business, it's a lot easier to do that than, say, if you're BP. It's the law of big numbers. It's much harder to put another 30 billion on when you're that size. Whereas if you're a few hundred million, it potentially is much more doable. Now, it doesn't mean it's going to happen, and we're not naive about that. You have to find the right business with the right management team to actually scale in that way. But the opportunity is certainly more exciting, and that's why we want to own these businesses that hopefully over time can grow into FTSE 100 businesses, because that to me is what growth is about, is watching that company evolve from that initial position to being bigger. And we bought AG Bell at IPO when it came in, when it floated for the trust, and again we've seen that business thrive and grow over time, and that's the exciting thing, is to see these businesses get to that scale over time.
Great, thank you. And one other theme that you talked about was the impact of M&A in the market more broadly. Has that been how dominant has that been as a factor for BG UK? Have you had many stocks being taken out? And do you ever reject bids?
Yes. Well, actually, yes to both. It's short answers. So we've had a few companies taken out, things like HomeServe, Euromoney, and then, for example, in both those cases, we didn't really want to lose them, but basically it was pretty much a done deal. So you had to kind of go along with it. But for example, with Rightmove, we were very clear we didn't think it was a good idea when the Australians wanted to kind of try and buy the business. We felt that they were underplaying the uniqueness of that business. They were basically saying, look, it's the cheapest online property portal in Europe, and they were saying, well, we can bid it up for that. But we were saying, well, that's just kind of, you could say it's an issue of the UK market. But what it was saying is, you're missing out on a business that's growing, that has 70% operating margins, which is phenomenal, but it's still growing. And it's got a very user-friendly management team that, again, are trying to find new markets. They are the dominant property portal. And we said, well, why would we want to sell that business on the cheap? it's very hard, frankly, Ryan, to find these types of businesses. And when you have them, you don't want to sell them cheaply.
I'm just going to combine a couple of these questions into a two-parter, if that's okay. One of them is, how does the trust stand out in its sector against a number of peers with very good track records that also have a bias towards that sort of mid-cap FTSE 250 space? And then perhaps as a follow-up to that, the discount on the trust is one of the widest in the sector. What measures are the board undertaking to try and correct this?
Yeah, well, I mean, I think in distinctiveness, first of all, we're not a mid-cap portfolio, we're an all-cap. So we're kind of covering, so in sense of, we should be compared to a mid-cap because we can own FTSE 100 companies. And, FTSE 100 is about 40% of the portfolio. And that's things like, Games Workshop moving into the FTSE 100. So then that adds about 6-7% to your FTSE 100 exposure. So that's how it can move around a lot. But, so we're just, we're not, we don't start with a kind of blank piece of, we want mid caps. We do want to find growth businesses. So we are very much compare us against UK peers rather than just a mid cap here because we have that flexibility to own FTSE 100 companies and own them for as long as we can. In terms of your discount, that's a really interesting question. What the board put out a statement not that long ago where they basically committed to holding the discount in single figures. And actually the share price has had a bounce on the day, and that discount has stayed in that single figure as we're buying back stock. So I think that's a really strong message from the board and for the trust that we're not prepared to let the discount just kind of blow out and not care about it. But for shareholders, what you're getting is a kind of great growth portfolio, but also a board that are very committed to making sure that the discount remains reasonable, which is kind of single digit, and it's buying back that stock. So for existing holders, that's attractive because effectively you're getting 90p, you get a pound of assets for just under 90p or just over 90p. And you've got a management team and a board that are basically committed to keeping that discount at that level, which I think is very attractive for a long-term owner.
Absolutely. And then also one of the other key benefits of the investment trust structure more broadly is that you're able to use gearing to try and increase your market exposure. What's the current level of gearing on the trust and how do you go about using it?
Yeah, our gearing's about 8-9% at the moment, which is kind of we're quite happy with it. And you're absolutely right, Ryan. I think that's one of the really kind of key points. There's been a lot of discussion about SABA and so on, making the point about what's the difference between an investment trust and a unit trust. Well, that's, as you said, that's one of the key differences that an investment trust can borrow, and therefore potentially you can use that power of the gearing to kind of generate additional return over time. And I think that's one of the reasons why I like investment trusts, per se, not just running one, but actually investing in it. I'm investing in this one, obviously, but in other ones too, because you have that ability to kind of get that benefit of gearing too. So it's prudent, it's not excessive, but I think in the long run it will add to shareholder returns, which I think is very attractive.
Absolutely. And just keeping an eye on the time, moving towards sort of the last minute of the presentation. So we'll perhaps ask one final question on outlook. Who do you think will be the marginal buyer of UK equities that can inspire the turnaround?
Oh, wow, that's an interesting point for the last one, Ryan. Look, I don't know, but I can see the catalyst building that I think the valuation, as I showed in that slide earlier on, it's high as it's been for a very long period of time. That just cannot continue. Something's going to have to happen. And I think, whether it's international investors or potentially people who are listening to this saying, what, actually, this is quite an attractive time. People have been talking about, the Mag 7 and so on, or, you've got to be in the US and so on. But ultimately, you have to buy when you think that assets are mispriced. That's how you make money, whether for me as a growth manager or as a potential shareholder. You want to buy things that are out of favor that you think have got opportunities to grow. And I think in the UK, and particularly UK growth companies, are very attractive at the moment. So that's why I remain very upbeat, because I think the fundamentals are all there. The valuation is very, very modest, and wherever that marginal buyer is, I think we'll actually have a very good return, because I think you're not paying up for growth, and I think that's very, very important and very exciting for us.
Well, on that very positive note, I think we will draw the presentation to a close. So thank you very much, Ian. I never thought we'd have a presentation where my car buying history would be so heavily discussed. And then also thank you to all our audience for watching and the questions. If you'd like to catch up on anything that Ian discussed in the webinar, a recording will be available on the website in the next 24 hours, as well as a copy of the slide decks. For now, please enjoy the rest of your day, and we look forward to seeing you at our next event tomorrow. Thank you.
Thank you.